Hello, everyone. TGIF. How you doing, Alexander, Didier, John? John says I might be barking up the wrong tree here, but I would, WOOD, go out on a limb and say the lumber price is lofty. Very good play on words, John. Hi, Hugo, Ingmar, Marco. Hi, Kevin, Ren. Paul, how are you? You see a black screen only? Okay, because I'm going to bring up the charts now. So today is NFP, and you know what? We should have you should have NFP written down, okay? Because NFP could stand for no FOMO, please. No FOMO, please. Just a quick story: when I was moderating LAR on FX Street, one of the attendees or someone who used to come to all of those, NFPs and during the week said to me, Dale, I bought the euro right before the NFP was a weak number and the euro rallied 100 pips. And I said, good guess, because that's all it is. It's a roulette bet. If you're anticipating how the market will react to the number, even if you know the number, you don't know how the market's going to react to the number. So I prefer to react to the reaction. Yesterday in the S&Ps, I was saying if we got through 80, we had a chance for a new high. I said I wouldn't mind that because that's going to set up another selling situation. Yeah, selling situation in NASDAQ. Look at the difference between the charts. Okay.
Dale, we still can't see your screen.
No
or
kidding.
At least I can't see it.
Oh, okay. There it is. How about now?
There you go. There you go. Good.
Oh gosh, it's Friday and I'm 90 years old and all this stuff, thank you very much.
Good morning.
Yeah, so anyway, so it's like two different, it's like they're not even the same related. Look at this again. Now, there are targets, if you happen to be a ForexAnalytix subscriber, maybe you would have been long S&Ps yesterday. Greg got long 4170-ish. Got a nice move going here. So, just that one trade, and even if you didn't ride it to his target, he's looking for 4,400. I've heard that target before. Okay, nice. So NAS, yeah, your preferred long is S&Ps. So if we get to 4,400, NASDAQ, of course, will make a new high. I'm figuring about could get up to about 14.2, 14.3 if we go to even 4,300. So I know a very good Elliotician that when the market started acting better, even before this week's pullback, he was looking for 43.14. So, we could be there in a few weeks. If you recall our visit with Mark Newton, he was thinking by the end of May. So it looks like we have another wave to the upside, unless it fails here on the NFP. But it looks like it could be a layup. I'm flat going into it. The dollar is holding the 2-week off number. Okay, so, if there is any weakness, and there may not be, because, this still looks like, it still could be in A, B, C, and now we're going to go again, break out over 91.40, and you don't want to be long the dollar under last Thursday's low. Tremendous move in the gold, still going, okay. Silver lagging it a little bit, and definitely when Yellen reversed her comments about rates, it really was a green light for the metals to fly, and they are flying. And, now I can see after the fact how a lot of people in gold are looking for this 1850 level, okay, because that's even like a measured move from here, 1680, 1760 gives you about 1840, 1850 up here. A lot of moving averages here. So metals look good, although if we start diverging on some shorter time frames next week, maybe I'll try it. Okay, dead cat bounce, Paul. All right, the euro is. We'll see if it's a dead cat bounce or not. I think today's going to be pretty decisive. You know, I don't know, you know, how you can have an opinion in cable, but you know, to me, it looks much more like a descending triangle. This setup here on the 4-hour, you have a descending line on top, this one, and you have a flat bottom at 38.15. And should we get a breakdown under 38.15, you have a decent shot for 36. And I always felt that this blue line down here, 35, was going to be some type of magnet for cable. So I'm still bullish the dollar. Okay, so I'll know today if I'm wrong. So called the bottom here and here, sorry, here too, but here, and don't fight the short side of the dollar back over 91.40 because it's going to get to 92 to 92 and a half. And let's see what else is there really to talk about before the number, because your charts don't mean that much. Crude continues to slide from the top. You know, we never made a new high in crude. And really, crude should top before a stock indexes. So, you know, this is going to be a real good test. I know a lot of people are looking for sharply higher crude prices, 75, 85. I'm not in that camp yet. And I think also Mark Newton said that this could have just been an ABC for B, and we have a C to follow to the downside. So still remain negative on the crude oil. So we have Stell and Steve here. The interview today is with Charlie Gasparino. I'm going to talk to him about Janet Yellen's 360, among other writings that I've been paying attention to since the last time he was on. And, you know, this I think is also important. I thought we were going to have a breakout back over, that this was going to be a false breakdown, but, you know, we're having a hard time closing over 19. Okay, so that's pretty much it. I hope everyone had a decent week, and let's see what happens with the NFP. I think the dollar is looking, we're starting to get some type of reversal day here too, right? Higher low. So only the NFP could, I think, if we didn't have it, I'd be buying this dip right here. So trying to stick to my discipline and be flat and react to it. And I would fade dollar weakness today. So we'll see what happens on the NFP. Still, what are you thinking? What's the market expectation? They expecting a hot number? Is the bar high or what?
Good morning, everybody.
Good morning.
Interestingly, we're expecting just under 1 million jobs, but I was looking at the estimates of the major banks, and I think the lowest one was 900,000, the highest one was 2.1 million. So I think,
oh wow,
I think we are maybe expecting 1 million, but I think the big boys are expecting more. So is that,
okay.
you know, which way do you treat that? Is it something that the market might get disappointed, or do they know something, or are they, you know, cleverer than everybody else? You know, it's
Yeah.
tricky one, but I think overall it has to be a big miss
Beat.
or beat
Oh,
for
okay.
markets to care. But I do think that there's going to be a bigger market reaction if it's weaker than expected, which means more risk on, which is still the pain trade, because everybody thinks it's overpriced, equities are overpriced, and they're trying to short them, and they're getting burned every time. That's why I've said, you know, I'm not long, but I'm definitely never going to short this until I see a proper catalyst. And as I always say, I don't mind missing the first 5%, as long as I catch a bit more of the move.
Now, yeah, the NASDAQ, I mean, it was a good trade from 14,000. You know, it was about 500 points, but, you know, you didn't, and, you know, the S&P wasn't bad either. It was 70 handles, but you're right, nothing. We will still diverge on the S&Ps, but I think that they may blow it out. Maybe this is a blow off that, you guys are talking about. Steve had, drew a chart with, going straight up. And we had a guest last week who was talking about a melt up to 4,900, 4,700, excuse me. So we'll see. I mean, the market's set up now. Everyone, I'd say there's probably at least one stop over 4220. So that's where the stops are. So the stops in the S&Ps are over the high 4220 and the low this week at 4130. Anything happening on the currency front, bro? Overseas?
Nothing major from what I can see. The dollar is kind of very neutral going into the numbers, and really, like we've said before, we have to see for us to get any kind of risk-off move, we have to see either the dollar strengthening or yields rising. I don't think there's any other way we can get any traction. But currency-wise, just mildly, commodity currencies mildly lower, but nothing to write home about. So it's just a waiting game until payrolls, basically.
Yeah, Ben, when's your next cycle date? I know you had an April date and then you had a May date. Right now? Okay. All right, so we'll see. Maybe it's just going to be a little 3 drive here on the 4 hour. Does it show up? You could have 1, you could have 2 and 3, but you need a new high first. We're in the window. Okay, well, it's good to be in the window, Ben, but don't jump out of it. Okay, it's good to be in the time window, but if you're, in the skyscraper, do not jump. All right, is Steve around?
I'm
He
here.
should be.
Oh,
he's here,
good.
yes.
I miss you. I hardly get to hear you because I blab too long every morning during these shortened sessions, and then you think you talked, Blake will go till the last 5 minutes and then go, okay, guys, what do you think? So, why don't you guys, Steve, what are your thoughts going into the number here today? Anything that is on your radar that you're paying attention to possibly, that's compelling for you? I know you're a dollar bear. Congratulations on your, long metals position. That's looking good. And Stel, great call in the metals. Stel's blog, if you had read it, when it was posted, you made about $40 in gold, and I don't know how much in silver. And the miners also kicked in yesterday. So, if you're following what the guys are doing, you're doing okay. You had a good week. Just a quick look at Bitcoin. Bitcoin, this looks like this could be a failing rally here. With crypto, maybe this is going to be a sign that we get some risk off too. And I keep looking at this 36.5 level on the daily 200-day down here. And if you just take this and we get another one, that's where it could go. What do you think, Steve? Crypto look vulnerable?
I'm going to be boring once again and reiterate what I've been saying day in and day out.
Well, make a recording.
Yeah, I actually should. Meaning, first of all, I think the risks are tilted for today's NFPs to just unleash investors to do more buying in risk assets, because that is where everybody wants to be unless they get a reason not to be there. And so far, the stars remain aligned, meaning we have clearly inflationary forces coming through while the Fed is refusing to acknowledge them or do something about them. So the monetary pedal remains stuck on the metal, and despite all the rest, which means that we have inflation, we have monetary easing in full throttle, we have interest rates at 0 and probably going to stay there for much longer than people believe. We have FOMO, we have no alternatives, and all the rest. So I think that the risks, quote unquote risks, are for a continuation of the rally in risk assets today, and the resumption in the downtrend of the dollar. And I think that's where everybody should be looking towards, unless at some point we get something major that would get us to rethink that. Now, risk assets.
What if the Chinese rocket that is
lands on the Fed?
Yeah. would that end, or do they have a bunker?
That would end the Fed. That would end the Fed. Yeah. I hope it doesn't. By the way, I really do.
Ben talks about institutions failing. You know, when I look at this, this is the 30-year yield, but it looks a lot like the 10. Remember last week, Greg was here, and he's looking for one more spike up in rates. He showed the bond chart. Sure looks like that could happen on a strong number. It wouldn't take much.
Absolutely. I mean, we were saying that last week and the week before. We had an initial reversal lower in yields, but the way this reversal unfolded leaves no room for misinterpretation. It's most likely corrective, so another consolidation in an uptrend. So yes, I do expect yields to probably continue higher, and clearly the catalyst can be strong NFPs today, right?
Yeah,
the catalyst can be that. Now, of course,
how would the dollar react?
Risking of being boring once again, I just need to reiterate that a lot of the movement that we've been seeing have to do with a wrong interpretation of what's happening. For example, I've explained before that the metals, yes, I know that the metals have picked up in pace during the past few days, but they're still underperforming vastly the rise we've seen in other type of commodities. And the reason for that is the investors misreading and believing that the Fed is going to have to yield to everything that's happening and actually tighten faster than they claim they will, so on and so forth. I believe they're wrong. I believe in this case, I totally believe the Fed, not for any other reason, but because they've painted themselves in a corner. Yes, exactly. And the alternative would be pricking the bubble that is sustaining this phony picture that everything is all right. Now, are the economies globally recovering from the COVID year? Yes, they are. There is no question about it. But nobody asks the obvious question. The stock markets are already 100% higher than where they were at the bottom. They're already significantly higher from where they were at the highs. So the question that has to be asked is not if the economies are going to end up recovering from COVID, is are they going to recover to where they were? No, because we have a lot of extra debt, a lot of extra liabilities, and a lot more structural problems. So what is exactly the market pricing in other than very easy monetary policy? Nothing, right? But this monetary policy is exactly the lifeline to keeping this thing together. So they can't reverse that without destroying this construct. It's like hoping that you're going to be swimming in the sea, and then the water is going to go away, and you're going to keep on swimming on air. That can't really happen, right?
What do you make about the? What do you make over the Yellen statement and then reversal of the statement? Do you think? I mean, was it just
it's the typical trial balloon, isn't it?
Yeah. I mean, could it have been just a she forgot she wasn't at the Fed anymore, or is she maybe preparing the ground to have Powell's back when he finally has to do it?
I don't know what exactly it was. It was another display of ridiculous behavior, if you ask me, because it's so annoying and boring that the same people are doing against, like Paul at the beginning,
Yeah.
the same
Yeah.
quote unquote mistakes. Of course, the only mistaken thing about them is that they're forced to take them back, not the fact that they're saying what they're saying. You know what I mean? It seems to me that on occasion they speak more freely, and then they realize, what the hell did I just do? You know, I mean, am I stupid? What am I trying to do here?
It's
I'm going to be
it's a bit like Brainerd. And our friend Jason is very right. Says it seems
Yeah.
to be the Fed is preparing the market for tapering. And Brainerd yesterday said that warned that there could be a repricing event, which is going to be
Really?
amplified by high levels of corporate indebtedness. I mean, that's so correct.
Who would
But-
have guessed that? Yeah, I mean, on occasion they throw like a firecracker, like a oh yeah, I think the English word is kernel. They throw like a kernel of truth out there, and in the vast majority of the cases they have to immediately take it back, or soften what they said, so they don't. So, bottom line, it's the trial balloon that Stelio says. They are trying to test the waters, and hopefully they can see at some point the market not reacting that harshly to the idea. They're going to find out that they're absolutely wrong. I mean, investors are not stupid. I mean, the smart money is called smart money for a reason. Many of them are fully aware that they're long assets that are priced beyond perfection, right? So investors are not stupid, or many of those that actually have the big bucks are not stupid. They know that once the lifeline and support from the Fed goes away, there is absolutely no chance that valuations will keep on being what they are. Right. So the moment they realize that the Fed is seriously thinking of starting to, taper and perhaps hike once again, they will immediately want to de-risk. But what happens when a lot of money want to exit at the same time so they can protect their profits? We all know what happens in this case, right? So in my opinion, the only way the Fed, in this case, after the 13 years of excess monetary madness, the only way that the Fed can actually reverse course and the market not crashing is if they end up buying stocks themselves. I don't see any other way around.
They might do that. Bank of Japan.
They might, that's why I'm saying it. And you remember I've said it in the past, Elio. I think it's an inevitable reality. At some point, the Fed, in the not so distant future, I'm pretty sure it's going to be within this decade that we're currently in. They're going to have to, in essence, violate another part of their mandate and create some kind of a structure so they can buy equities themselves. So in essence, completely destroy another market, which they've half destroyed anyhow, because they've been manipulating more or less all markets by the spillover effect and the correlations with the bond markets, which they've completely dominated and repriced.
Yeah. But you know what? They might already be doing that, right? The plunge protection team, which
who knows?
We had people talk about it on Trader Summit, and they.
Yeah, I just think it's going to become still more prominent and more legally obvious. You know what I mean?
Yeah.
So
and
it's not going to be.
Jason is asking, what's so wrong with markets correcting? Of course, there's nothing wrong. In fact, you need a healthy correction in every move. Going down 20, 30% after having gone up 4 times, it's very normal. And you have to have these cycles. But for some reason, it's forbidden now. We just cannot have that. And
they can't afford it.
That makes it so much worse for when it does happen, when they actually cannot control it anymore. And but like we've said before, it's all short-sightedness. They don't care. I want to finish my term with no crashes, nothing. Thank you very much, and I'll be going into the history books as being really stable. Economy.
Just imagine we haven't recovered yet from COVID. We haven't, right? And we are 24% higher than at the highs pre-COVID, that the market was pricing in.
Well, we've had the massive expansion of monetary base. Jason is asking, what do you think about, what do you mean by they can't afford it? Politically, they can't afford it, right? It's you don't want the bomb to explode in your hands.
Politically, and as I said, they've tied the fates of the.
Steve, do you mind taking the screen for a few minutes? Dale has to.
Oh, absolutely.
Just in case the guest arrives.
Yeah, they've in essence, we've talked about it. They've in essence
Thank you,
tied the
guys.
fate of they've tied the fate of the, let's say, economy to what happens to
their own
financial
success,
assets.
and
Yes.
they're tying their own success with financial markets, which is, you just can't have no recessions, no equity market corrections. You just can't have it. It doesn't mean that your policies are wrong if it happens that markets, the timing of markets happens while you're in control, or in the lead of the Fed or whatever. But anyway, I guess they don't see it that way, and it's it just makes the drop even more severe when it happens. That's what it's going to do. And we've said this so many times, and there's so much euphoria now that people know that any dip should be bought. End of story.
Yeah, speaking of
Crazy.
euphoria, other than the fact that we're obviously cracking new all-time highs in the S&P, we still have a little bit of a divergence in the Nasdaq, and that comes to the conversation we had the other day. Although it might have been in the other webinar that's for clients, speaking about this Nasdaq to SPX ratio that is clearly, at least in some type of a corrective move, which is an interesting perspective. In my opinion, there's more weakness to come in this ratio, so probably more overperformance in the S&P relative to the
Yeah, I like that chart.
Nasdaq. It is also, look at the rebound we had in the VIX. The rebound looks corrective to me once again, and it's important the fact that we spiked twice intraday over this 20 area, which was now acting as resistance, but we never managed to close above it. So even by looking at the VIX, I tend to think that the likelihood is for more strength in equities. Now, how likely is this more strength to come with strength in the dollar as well? In my opinion, not very likely. So, best case scenario for the dollar, I think it's going to continue consolidating around these levels. But if you ask me, I still believe that the odds are in favor of a breakdown in the dollar and a continuation to new lows. So, it is as simple as that. And it comes to the conversation we had yesterday in the clients webinar, where I explained once again why I don't think that the prevailing scenario, for example, in commodity currencies like the Aussie, is for a head and shoulders formation. Yes, this can prove to be a head and shoulders formation if we break below, what is it, like 75, 70 or whatever it is. But I think it most probably won't break down from there. I think most likely we're going to produce new highs, and this is going to prove to be another consolidation and not a reversal formation. Um, we had also talked several times during the past few weeks about the USD CAD, the USD NOK, where I kept insisting, look at the CAD yesterday, I kept insisting that you shouldn't be trying to fade their strength. So in essence, the weakness of USD CAD and USD NOK. Here's USD CAD, very, very close to multi-year lows. And here's the USD NOK that once again retested this broken triangles trend line support as resistance and seems to be holding below it. So bottom line, I think that you shouldn't be trying to fade the recent trends until you get solid proof that something changes. So that
And you've
something
been
changes.
spot on that, Steve. Well done. I mean, USD
Oh,
NOK, you've been all over
yeah,
it.
yeah, and very good advice that I didn't take. I tried to fade Canada, not yesterday.
I think
Day
it's the
before.
wrong time, guys, to try to fade the trends. I think it's
I
the
thought
wrong
I'd
time
try
because
it since the oil started to sell
just to
off.
give you the fundamental backing of what I'm saying, and I know that we have data in 20 seconds, so I'm going to interrupt for us to look at the data, of course.
And then I'll bring Charlie in
Yes,
after the
absolutely.
data, see what kind of reaction
I
we
just
have.
believe that the euphoria might keep getting fed by improvement of numbers, which of course is like, year to year, there is going to be an improvement in numbers.
Let's see. 9, what is it?
Oh, okay.
Oh,
that's
266. Oh my
yeah,
God.
that's a huge.
And downward revision as well. Unemployment up 6.1%.
That's a huge.
That's a very bad miss. That's a very bad miss.
That is a huge miss, especially in a market that was more or less getting prepared like for a bigger blow-off number.
Yes. Oh my God, that's a treasury is getting bid. Makes sense.
Dollar is dumping, by the way. So
Yeah.
initial reaction, dollar is getting sold.
Risk is
as an
higher.
initial reaction. The dollar is getting sold. So now, the $1 million question is the following: after the market gives a little bit of thought to these numbers, is it going to end up thinking, something that actually indeed means that the Fed is going to remain accommodative for a longer period of time, so let's keep on going with the party? Or is the market going to start wondering about, the validity of pricing in all the positiveness?
You know what it's going to be. Short-term memory markets only.
Yes,
we go higher. End of story.
The initial reaction, as you see, is like, oh yeah, the party is going to go on longer. So, the Fed is going to have our back for longer. So let's go ahead, dump the dollar, buy stuff that have a direct or indirect yield, and we move forward from here. Let's have a look at the metals, by the way.
Let's get Charlie in, and we'll have a look at everything on the morning edge afterwards. Okay.
So here it is: gold exploding higher, silver exploding higher. We're going to have a look at all that in the morning edge. Anyhow, interesting numbers, unexpected for sure. Initial reaction, as we said, lower dollar, higher risk assets. Let's see if in an hour we're going to have the same data. For the time being, that seems to be the case. Enjoy the interview.
Thank you very much.
Thank you, guys.
Thank you, Steve. Charlie, welcome back.
Can you hear me?
Got you, buddy. So what do you think of the... Okay.
Can you see me? Because I can't. Am I in this thing?
You're in it. All you have to do is click start.
I just enabled your video. Yeah, there you go. So you can switch it on now.
All right. Let me turn on the light. I'm in my apartment in the city, so.
All right.
Exactly as conducive as my other one.
Well, at least you're in the city and getting around, Charlie.
Yeah.
Huh? So
yeah, no, definitely getting around. Hang on 1 second.
Yeah,
turn on one more light.
Okay. You have a flashlight and a candle?
See if I can roll up this shade.
There.
Is that better?
Yeah. Good, buddy.
All right.
All right. So do you have any reaction to the NFP, to the number that we just had?
It's pretty I mean, every time I think there's going to be inflation, we get a reading like this. You know what I'm saying?
Yeah.
I mean, I kind of want, this is just me. I kind of want some high inflation numbers, so the markets impose some discipline on this administration, which wants to keep spending and spending and spending. I think that's the only way to stop them from literally spending another $5 trillion or $10 trillion is to literally get a spike in the long bond above 3%. By the way, I didn't come up with that. Jamie Dimon has mentioned that as a potential. People are talking about that. So when I see
Janet Yellen whispered it, you wrote about it. I mean,
yes.
And then retracted and did a 360. Was she? I mean, I read what you thought that, maybe it's just a misstep, but she's a pretty smart woman. Do you think that she was out there just trying to prepare the ground for what the Fed is going to have to do? Because she knows it, even though, she doesn't come out and say it. That I mean, all you have to do is look at the price of commodities and gold and what's happening everywhere. Lumber. I was I was on the CME floor, and I've looked at all these prices, Charlie, including meat prices, live cattle and hogs, and it's gonna be expensive to have a barbecue this summer.
And I love ribs. Well, let me ask you this: how do you justify the commodities trading like there's going to be inflation with the number that just came out?
Because of dollar weakness. So you get, you get a weaker dollar in nominal terms. It takes more dollars to buy something, normally drives up prices, nominal price increases. In fact,
Well, so let me
after
ask you this, Dale, you're better than this than I am. Is that, where's the inflation? If you have these type of prints on unemployment and stuff like that.
the inflation is on the fiscal and monetary side, that there's no, this makes the Fed look right, that, weak number is bullish because they have to stay loose, and a strong number is good because we're having a recovery. But, the inflation is a lot of it's supply chain.
Yeah, I've heard that. I get
A lot of it's currency. I mean, we had the dollar index at 100. Now it's trading 10% lower. I mean, it doesn't justify 1900 lumber, but a lot of it is supply chain, I think, and the weak dollar. And I'm not a believer that it's a secular story. It's a cyclical story. What's happening here? I still think that we're going to have one more whoosh once risk assets cave, and I think that's a possibility that we're putting in a pretty important top here in the next 30 days or so. And I think that Janet Yellen sees it too. I mean, how can you not look at the price of anything copper, Charlie?
Yeah.
Trade. I remember when I was a commodity broker in Chicago, a bull move in copper would be to 90 cents from 50. Okay, so and on the board of trade, Charlie, they were, there was a chant of beans in the teens because they'd always rally to 10, 12 bucks a bushel. And the floor traders wanted to see them in the teens. Well, the teens are normal now. We're looking at possibility of them being in the 20s and maybe $30 grains. And that, there are certain things that the Fed can't control. They can't print lumber, and they can't print corn. So that's where the inflation is.
Yeah, interesting. Well, that's kind of jives with the information I'm getting.
Okay. Yeah, but I still think
I got a ton of emails on the Janet Yellen story from just small business people that were telling me about supply chain and where they're seeing inflation. It's exactly what you were saying.
Okay. All right. So, that the lumber started during COVID when they were shutting down mills.
Yeah.
And, you shut down things, you shut down mines to reopen mines. It's like capping a well. If you cap an oil well, you can't just go back and turn it on. It takes time. So that's part of it. But I think, you and I have talked that the sacrificial lamb is going to be the dollar, because then it could make, a stagflation or, a depression look more invisible because prices are still going up. And the dollar's under pressure.
It was funny you mentioned stagflation. I was, we got a lot of young kids working at Fox, and I was actually explaining what stagflation was like in the 70s. Yeah. They had, obviously these kids were born in the 90s. Right. So they had no idea that there was something called stagflation. We had massive inflation, and I remember my old man couldn't get a job. I mean, there was New York City. Compounding the problem in New York City was the financial crisis in New York City at the time, where all buildings stopped. My dad was a construction worker, so he got a job at a bar. He worked as a bartender, and I remember pumping gas back then, where the lines were around the block. I mean, it's
yeah, that's a great segue to something I want to discuss with you, because I'm kind of aggravated about hearing this already about all these government support programs by both former President Trump and current President Biden, that they both say, and they both justify all of this support, and this is Republican and Democrat, that we are doing this because it was through no fault of anybody that this pandemic happened. Well, you know what? When your dad was laid off in the 70s, it was no fault of his own. right?
Yeah.
So why is it now a justification for what we're doing with both parties that, wasn't anyone's fault that there was a pandemic? Well, you know what? People have gone through economic hardship through no fault of their own throughout our history and prehistory. So why now are both Republicans and Democrats justifying things like millionaires getting PPE because they have they have employees. So, I was always taught that you save for a rainy day because it rains. And now a couple of states are ending the federal unemployment benefits because they have worker shortage. So, I just don't understand this justification. It was never my fault. Well, yeah, it probably was a few times when I lost a job, you know, but for millions of people all these years, it sticks in my craw that the justification is because it was a pandemic and it wasn't anybody's fault that
Well,
people
I
are
mean,
going
listen,
through economic hardship.
you can say the 70s were the fault of the Fed, or fiscal policy, monetary policy, and then an Arab oil embargo, which was a price shock, which helped the push along the stagflation. But those are sort of extraneous, one step removed, arm's length transactions. Well, the problem with this thing, it was literally mandated by the government that we shut everything down.
Okay.
And it was like government fiat. We're
All
stopping.
right.
We're stopping.
Good point.
And some states did better than others. Florida, for example, said enough's enough in May of last year. Right? New York did. New York is just only now coming around, and I think that justified some of the spending. Now, did the Trump administration do a great job with the PPE and all that? Of course not. I mean, I know people that had no impact on the from COVID, in the sense that they had a company. It was in public relations. It was legal. These were financial advisors who everybody was working from home, dealing with clients and making money.
Right.
They got PPE loans.
Yeah.
Okay.
I know that's aggravating.
I know a restaurateur in New York that could have used 3 PPE loans because he was hurting so bad. They shut down his business, and he only slowly but surely had to build stuff out, like build an outdoor thing, because they wouldn't let indoor dining. They allowed 25% indoor dining, and then they cut that down. I mean, it was a crap show. Okay, I get that.
Yeah.
But, that's more incompetence. I think what we're at now, and I listen, I've been very critical of the Trump administration spending and all, and a lot more. This is going beyond that, what we have now. What we have now, in the face, even with today's print, of a decent economic recovery. And if you notice, stocks, the futures haven't moved. They're up because people think the Fed's going to keep printing money.
Right.
I think what you have now is, in the face of an economic recovery, this sort of weird justification to spend $5 trillion. That it's just it now. It's like I'm not saying Trump was any better, but the justification now is much more incredulous, so to speak.
Okay. All right. So I also wanted to talk about we're capitalists, and dog eat dog, and survival of the fittest, and another situation that I think is really unjustified is take the airlines. All right. So after the tax cut, all that money that they saved in taxes went into financial engineering and stock buybacks. Okay. And so they didn't have any reserves. Why didn't we just let them go down, Charlie? I mean, airlines have gone bankrupt throughout my lifetime. Where's Continental Air? I mean, why didn't we let them go down? And why didn't they use some of that their funds, instead of financial engineering? So, compensation for CEOs and executives is based upon the stock price. And then they weren't hurting. Why did we bail out the airlines? Was it like bailing out the auto companies in
I mean,
2008?
like, why do we bail out the banks? Let's be clear here. When the airline is a from listen, what little I know about the airline business, it's not an easy business. It's got very tight margins. It's heavily regulated. So yes, they did stock buybacks, but I'm pretty sure they also compensated their people along the way, and expanded employment. But again, through government fiat, you would have had a whole industry put out of business literally overnight because the government said we're shutting everything down. That to me seems like it's that they and by the way, if all the airlines went out of business, what would that mean?
That would affect business for transport, and
it would just be a horrible situation. So I think that was
it'd be harder to flee the country.
Yes, right.
All right.
I wasn't sure if you were kidding or not, but you see what I'm saying. The government literally would have destroyed the business. Now, I think you're on stronger grounds on the automobile industry and the banks. The banks created the problem themselves, so to speak. You could say the Fed, because easy money spurred their risk taking, but it was their risk controls that weren't up to par, and thus they took enormous risk and they blew themselves up. So do they deserve a bailout? The automobile industry, kind of the same thing. They were facing a recession on top of the fact that they cut all these deals with unions that made their balance sheet untenable when they hit a massive downturn. Again, do they deserve bailouts? And I think that's different than saying, okay, the government is shutting everything down, and we have a chance, and there's a good chance the airline industry might go at least into a Chapter 11 restructuring, unless we give them money. I still can't believe they shut everything down. To me, after the first month, when you know that your hospital system, and we're not India here, thank God. We're an advanced economy and country. In a month after you saw in New York that you can handle the situation, you have barges, there was a way to manage what was going on in the hospitals. And I know a lot about what was going on in the hospitals because my brother was on ground zero. He runs the ICU at Brooklyn Hospital, which is ground zero because it's an inner city hospital.
Right.
The Times wrote a lot about this. It was really on the cusp of the pandemic. But once they were able to get their hands around it from a ICU standpoint, have enough PPE, have enough oxygen, the question is, from a public policy standpoint, do you shut everything down? Do you destroy an economy? Should you be managing it by telling people most vulnerable, you stay in, other people work, keep schools open because kids don't get this shit? It was really a horrendous thing, what they did in New York State, as compared to Florida and Texas, where the death rates are, hospitalizations, case loads were, not that much different, despite their economy doing well and ours not. Because
Sweden did that. They didn't shut down, right?
They did not. And
where are they at now? I really haven't kept in touch. Have they
don't hear much about
the pandemic?
I think they're on the other side of it. Listen, one of the problems with this subject about the pandemic and figuring out is how politicized it is. It is politicized by the right by saying you don't need to wear masks, you don't have to do this, you don't have to do that. It's nothing, it's like the flu, which, by the way, it's not. And then it's politicized by the right saying that, and it's politicized by the left that if we don't shut down, everybody's gonna die. And that was one of the problems here. Literally, I remember listening to Dr. Osterholm, who's now he's an infectious disease expert.
Oh, the guy out of Houston, I think, right?
Yeah, and he's Biden's guy. His proposal was to do something like a $3 trillion bond deal, so everybody stays in for like 6 months. It was like the most insane thing I've ever heard of. I'm not saying he's stupid, but he has no concept of public policy.
Okay. All right, so why don't we switch gears to something that's near and dear to millennials' hearts, and that's crypto. You did an article on the crypto, Charlie, and you're talking about how the regulators and regulations could cause a crash in crypto. And I think Janet Yellen she's throwing out a lot of trial balloons. She must have a helium tank or something in her house now, but she's talking about taxing crypto at 80% and for capital gains.
She did not say that.
She did not say that? Okay.
That was a rumor. Thank God.
Okay. Okay. All right. So what could they do now that the horse is out of the barn? And a lot of banks this week have announced that they're going to allow the public to have crypto accounts.
Yeah.
And why did they let this Pandora box out of the bag to have a competition for to their own currency?
Great question. Well, I mean, sometimes government is incredibly bad at getting in front of innovation, and they usually the innovation occurs and then the government comes in and does something stupid or tries to regulate it. What's interesting about Yellen and all these guys about I listened to Gensler yesterday give
he's pro crypto, isn't he?
Yeah, he's theoretic. I don't know that, but he taught it allegedly at MIT. He taught blockchain technology. Okay. My point is though, all these guys are talking a big talk about regulation. If it's Gensler wants to do gamification, crypto, Yellen wants to do crypto, they want to do this, that. If I'm doing a lot of reporting on this, they don't have undersecretaries and positions under them that's filled to do this stuff. Okay. I think people are forgetting this, that Biden is so behind, Biden administration. And I guess you can point your finger at Ron Klein, who's the White House chief of staff, the most powerful man in the country right now, has not appointed anybody to these positions. You're not going to have crypto regulation unless you point people to positions. And so remember, they're talking a good game now, but they're not. But because the Biden administration has been slow on the draw in terms of appointments, I don't see when they're going to start regulating crypto. I mean, that's one of the things that, even though it's coming and they keep saying it's coming, who knows when it's going to come?
What else is coming? What else is coming? We have a very informed audience here, and one of our attendees wants to know if you have heard any news that on June 16th, there's going to be an announcement of a digital US dollar, a CBDC. Have you heard of that?
So this is, this is like the Treasury putting this out?
I'm not sure. I didn't know about it till I just read it. Any follow-up information?
I have not heard, but it would sound, just from a public policy standpoint, it would sound crazy.
Yeah. I know China's doing it. They're going to have a digital yuan. So why is it crazy for the U.S. to have a? Go ahead. I'm not
saying it's crazy that they should do it. I just say it's crazy that they're going to do it now. I think you have to look at what's going on in the Biden administration to try to get your hands around this. Number one, they have nobody. They don't have enough warm bodies in senior positions to basically do much from a policy standpoint other than just let the train roll. Number two, they are so myopically focused on stimulus, on spending another $5 trillion, that all this other stuff just doesn't get done. And for Biden to go out and do a digital coin when he needs to, actually print money with dollars, and to create its own, to create some sort of an alternative to the dollar when they need to expand the Fed's balance sheet right now, because who knows how this thing is going to work out. If we get rate hikes, does the Fed have to come in and suppress rates? I mean, I just think it would be it would be a left turn that would maybe even destable the markets. And I don't think they don't want to. There's one thing I know is about them is they don't want to destable anything. They just want to keep spending shit.
Yeah. So, I just had another comment about the SEC enforcement guy, Alex O, of how, he wasn't liberal enough. What's it called? Wokeism? Because she. Oh, okay. So it's probably Alexandra.
Right.
Okay. So because she represented big oil, that the progressive part of the Democratic Party, which what's it called, wokeism, Charlie?
Yeah.
He's not liberal enough because of who she represented before this post, and she had to resign the post.
Yeah. I mean, listen, what you consider liberal and what I consider liberal is not liberal anymore. For example, I know a ton of people that,
well, you know what you consider and I consider conservative isn't conservative anymore. So we have wokeism on the left. What's the terminology for someone like Lynn Cheney not being conservative enough for the majority of the Republicans in the House? Do we have a term for that?
Here's what I would say about this Cheney thing and this the conservative, the crack up in conservatives. If you look at Lynn Cheney from a policy standpoint, she would have voted 99%
right
with Trump, right? Lower taxes, less government, less regulation.
Classical conservatism.
Yeah. I think the crack up in the Republican Party over what is a conservative is less about policy and more about personality. I think it's the fact, is Donald Trump a proper representation of the party, particularly after what he did in inciting the riot at the Capitol. And I think that's where we have, and during the years, is he the guy that we want leading us when he's tweeting out crazy stuff? But from a policy standpoint, just so you know, all these people kind of agree on stuff. There's a broad agreement on ratcheting back immigration levels, lower taxes. You can go down the line. It's the personality. Should he be running it? That what's going on, the crack up on the Democratic Party that you saw with Alex Ho being forced out as SEC enforcement chief, which is an extremely important job in government. That's the person that's going to crack down on the Wall Street bad guys. I mean, this is a big job.
Okay.
The thing of her was political. The left believes, as liberal as she probably is, in voting for higher taxes and more regulation, blah, 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 because she actually made money in the private sector and because she made money defending a corporation, in this case, Big Oil, when she was at Paul Weiss, she should be canceled. You can't have people like that in government. And the minute she had one little fault, right? She got dinged by a judge over something which looks pretty mundane, but it put her name in the news. They had to, she had to go, because they were going to seize on that to say, oh, look at this. She's not only this, but she represented Exxon and this case. By the way, the Exxon case that she represented Exxon against these villagers, if you read it, I mean, it doesn't, I'm not going out on a limb, and I wasn't there. Obviously, this has been going on for 20 years. The crux of the case is that Exxon wanted to kill Indonesian villagers and torture them because they had oil fields in Indonesia and that they allowed the government to do this. The evidence for that is pretty weak. You know what I'm saying? That what's his name? Rex Tillerson ordered people to be. I mean, it's just, think about how crazy that is. And that's why it's been thrown out of court, in and out. So just remember, the case itself is crazy.
All right. So, I want to wrap it with Charlie. I'm not on either side, but I'm very concerned that extremism in both parties is going to make it very difficult for the country to come together and get anything done, and a continuation of not just, trying to defeat people, but trying to hurt people. And
I'm with you on that.
Yeah. So, I mean, do you see anyone out there that can be a leader and be a compromiser and be a moderator? I so long for the days when Ronald Reagan and Tip O'Neill could tip a glass together, kind of like days gone by. Is it possible that someone might come out of this and be a uniter? I know that's what Biden ran on, but it doesn't look like it's happening.
Listen, this sort of nastiness that we see permeates all society right now. You got the cancel culture.
Yeah.
Listen, all you have to do is go on Twitter, and you do something that people don't like. you got 400 people like pulling up. 10 years ago, I said it was, I'm going to give you an example. I said it was nominated for the Pulitzer, which I thought I was by the Journal, right?
Yeah.
Some asshole wrote a story that said, oh no, he wasn't. And all of us used to say nominated when the paper put you up, which was a big process and a big deal inside the Wall Street Journal to distinguish it between a finalist. Okay. Listen to this. I once said I was nominated for the Pulitzer. I thought I was nominated. But then someone wrote, oh, Charlie Gasparino is a liar because he said he was nominated, but only finalists are nominated. This is how fucking crazy it is. Every time someone hates me, they will pull up that story and throw it in my face. And I get four people throwing it. Now, this is 4 out of 100,000 followers I have. But that's the type of society we live in. We live in a cancel culture. It almost made me say, I mean, I was like, I couldn't condemn Jeffrey Tubin for what he did because it was so innocent, even though it was stupid and disgusting. He didn't know what he was doing, but the guy was ridiculed for months on end. And I think this permeates all the way down through society. And I don't know, how do you change it? I mean, we need a cultural.
Well, you know, how about a gap down in Twitter stock? And I don't know if you've noticed it, Charlie, but I've seen Twitter slow down. You don't get the same kind of action that you got maybe a year ago. Even the streams are slowing down, and the stock price got walloped. So, Twitter, all social media.
But why are people, what I don't understand is why people are so angry. And, you know, it's so, I mean, it's like, I did a story the other day that said traders are speculating that Amazon might do a stock split. And it could come as a, and by the way, they are speculating. If you predate my story, there's a ton of stories. We'll talk about this. It moved the stock tremendously, right?
Yeah.
Moved the stock. I had no idea it was going to move the stock. I actually thought it was like a bullshit tweet. It was like hysterical. I was attacked by these fucking guys for hours. I was like, what the fuck? What did I do? I pointed out what traders are telling me. I did a story when I quoted the traders predicting it. And these guys, you're guilty of fraud. One guy was trying to say that I did the story because it would help guys that were writing call options or something like that.
Well, you know, I have a theory, and, you know, I've run a lot of trading rooms, and have moderated, and there are people out there that root for others to fail. And I think it's the same thing. And I believe that people do this to rationalize their own inadequacy and dissatisfaction
but
with
this
their
is permeating.
life. But
I think your bigger question is this permeates throughout society, politics, and we need a Tip O'Neill and a
that's what I'm saying.
Reagan. But you know, here's the thing: Biden is not doing that. He is actually stoking divisions more than I thought he would bring people together. He's not. I wasn't crazy about Trump, and I'm not crazy about Biden. So what does that make me? Normal. And
maybe an expat.
They're as normal as they come.
Yeah. So anyway, Charlie, great talking to you again. And I know you're out and about. Have you taken your trip to Vegas and blown 10K?
I'm going. We're thinking. So I'm doing 2 vacations. I got to give a book speech in Fort Lauderdale in late May. So my wife and I will do a vacation down there in North Miami Beach. We're going to stay away from South Beach. We're going to eat some good food. We're going to hang out. We're going to hang out and by the pool. And then me and my friends are going to Miami, just guys. And, you know, later in June, it's going to be hot as hell. But, you know, when you drink, sometimes you don't feel the heat as much.
Well, I think the summer is a window, bro, to go out and enjoy after our captivity for a year. Yes. But I just have a feeling that things could bubble up again with COVID again in the fall with all the variants.
I don't, you know what? I don't.
You don't? So. You think it's over?
I don't know about over, but here's what I would tell you. I read Marty McCary. He's a doctor. He's at Johns Hopkins. You can follow him on Twitter. Very good stuff on how the Pfizer vaccine handles variants. I mean, listen, what you really want to do is just take, I mean, listen, you know, it doesn't have to be 100% coverage, but if you eliminate COVID for the deathly, for the people at most at risk,
like me,
you basically, well, I wouldn't even put you in that. I would just say, you know, you start to like make this the
Yeah.
flu. And I think that's where we're going. And then you just
Uh,
live your life. You know?
I toast you on that one. May it be over, because I miss
Well,
I'm a
Dale,
singer.
Dale, the flu isn't over. You know that the flu
No.
still kills people. But what you want to do is make the pandemic be over. And I think
Right.
that's where we're heading. And based on all the numbers I see, and I try to read both sides,
Yeah.
and I think now we're going to cope with it better because it's not going to be a pandemic.
Well, get all your right-wing friends to get vaccinated, Charlie. That's your
Last night I was speaking with a right-wing friend of mine. It's funny you mentioned that, where he said he's definitely not going to get vaccinated because it screws with your DNA. And I was like,
right.
dude, I said,
Yeah.
where are you reading this? And he said he gets it from the QAnon boards.
Yeah,
I was like,
right.
we're in another era.
Yeah. Besides my genitals falling off, I had no side effects.
Well, I was going to say,
From the
in 10
vaccine.
years, what we were talking about yesterday, I said, I'm so grateful I can eat in a restaurant. Even in 10 years, if I grow an arm out of my ear, I don't care.
Yeah. All right, buddy. All right. Yeah. Have a great weekend, Charlie, and be talking to you soon, and appreciate your time.
Anytime. My pleasure.
All right.
We'll do it
Everyone,
again.
Charlie Gasparino. That's a wrap for the week. Good hunting the rest of the day. And remember, don't just count your pips, count your blessings. Adios, everyone. And you can join the team on their reaction to the NFP in 9 minutes. See everyone. Adios.